Hey, what is up, YouTube? Welcome back to the channel. I hope you're all doing well. In today's video, it's episode 2 of reviewing a different prop firm, and today it's Elite Trader Funding. Now, with Elite Trader Funding, I've had my fair share of experiences from going through the evals, passing the accounts, and earning an elite account, but I never got to the final end, which was a payout. So hopefully for 2024, we're able to become funded, get that payout, and cross that off the list. But in this video specifically, I'm going to break down all of the features that ETF has to offer, my own suggestions for improvements, and then my honest experience and my opinion about them. So without further ado, jumping into the first slide is, of course, table of contents. This is what you could expect from today's video. And for the first slide, it's actually the company background. So just like Bullinox, it was a little tricky to find when they were established. I might have missed it, but based on a few Google searches, 2022 seemed to have stood out. It's not 100% verified, but it's around 2021, 2022. So they've been around for a couple of years now. Now, straight off of their website, I'm quoting here, founded by 3 professionals who wanted to help empower the retail trader and reward them for disciplined success. Our experience and credentials include all of this stuff here. So the 3 founders of ETF essentially have a multitude of experience and strategies and just being in the market for such a long time that they have a lot to offer. And I think it's really interesting to see how with this company particularly, having so many years, and I'm sure they've had a lot of profit throughout their years, they're considering to give back to the retail trader and allowing retail traders basically a chance to make money in this kind of market and going through a prop firm and kind of building themselves up through this before they go to their own personal accounts. So really cool upbringing with ETF. But let's go ahead and jump into what ETF actually has to offer. So they do have 5 different accounts. So we're going to try to quickly go through some of the rules of them and what they're about. And then you can obviously see right here on the right-hand side, straight off of their website, this is pretty much the key differences of what you could expect for each one. So the first one is going to be the one-step account. That's a trailing drawdown account. And with this one, trailing drawdown is going to be trailing your unrealized gains. So definitely keep in mind, this is more about like ensuring you take your profit. The second account is the end of day drawdown. The end of day drawdown is just like the name, or at the end of the trading session is when your drawdown is going to be updated, and it also includes a daily loss limit. Now with the daily loss limit in ETF specifically, if you do breach the daily loss limit, you will forfeit your account, which means you would blow your account. So that's something you have to look out for. It is intraday. It's not a trailing daily loss limit, but if you ever hit it, then you lose the account. The third account is fast track. So a fast track is basically like a sped up account where you have a maximum of 14 calendar days in order to pass the account. If you don't pass the account after 14 calendar days, from what I've seen is you can possibly reach out to the customer service team and they'll be able to make some type of deal with you possibly to convert that fast track into whether it's like 100 or 250K account, like a regular one. The opportunity might be there, but otherwise if you don't do that, then you just lose out on that fast track. And with the fast track, it is trailing drawdown. So again, it's trailing intraday gains, unrealized intraday gains. The fourth account is the static account, which means your drawdown is never going to move. So as an example, I believe the 100K static is a $650 drawdown. And that means that the 650 is always going to stay right there. So let's say on day 1, you start at 650 drawdown, but you made a profit of $1,000. Well, then now that 650 becomes 1650. But then on day 2, let's say that you lost $1,000. That's okay, because then at the end of day 2, the 1650 you had will just come back down to 650. So that 650 is always just going to stay there. If you ever obviously get past that, bring it down to 0, then you lose the account. But static basically means it's not going to trail you and it's not going to update at the end of the day. And then finally, we have diamond hands. This is more catered towards individuals who like to hold overnight, especially over the weekends too. A little bit more swing trader vibes. And with the diamond hands, it's a combination of the end of day drawdown with the daily loss limit. So overall, the main goal in order to pass the evaluation accounts is to have a minimum of 5 trading days and to hit the profit target with obviously respecting, not losing your drawdown for the account. So that's the 2 main things you have to focus on. A really cool thing I want to point out though is that there's no scaling plan and there's no consistency percentage when it comes to the evaluation portion. But when it comes to the funded accounts, that is when there is a consistency percentage. We're going to talk about that a little bit later, but I just wanted to point that out right now. Across the board for any account size, $75 flat fee for any resets. And then lastly, you are able to have unlimited amount of evals, but the maximum amount of elite accounts is 3, and those are sim funded, and then for a live account it is 1. So one thing I do appreciate about ETF from my experience is how transparent they are. So if you actually go onto their help center page, you'll be able to see how to become a live elite funded trader. So it's like broken down everything from like the fees to the steps to what they expect out of you. You can even ask the moderators in Discord. They're very open and honest about how that works. So if you ever wanted to know more, I would recommend to do that. And then I wanted to put together all of the accounts, so feel free to pause the screen here if you like, so you can see what their drawdowns are, what the contracts are per account, and all that good stuff. It's all listed here. The pricing is going to be a little bit different probably in a couple months from now, a couple weeks from now, or whatever, but that's because there is a deal going on right now. So don't mind the pricing, it might be adjusted, but that's everything here, all 5 accounts on one page. Now sliding over to the activation fee. The activation fee with ETF is that there's 2 different options. We have the monthly option of a flat $80 per month, and then the second one is going to be the lifetime. Now the lifetime is dependent on the account size and account that you have, but it is not applicable to the fast tracks. One thing that I have to say with the fast tracks though is that if you do pass the 100K account, you would receive actually 1 month of free data. So let's say you pass the 100K eval fast track, then you get your funded account, and in that first month you don't have to pay any activation fee. The second month and on, then you would have to pay. And then for the 250K, really cool deal here is that you get 2 months of free data, which means if you pass the 250K eval, you move into the funded account. The first and the second month of your funded account, there's no activation fee, so you don't have to pay the $80 times 2. So you're saving $160 basically, and then month 3 and on is when you would have to get on to paying the activation fee. Now, another thing I like to point out that I think is a big W with ETF is the ability to switch from a monthly activation fee to a lifetime. Now, this is really beneficial to, I think, a lot of traders because let's say in the event you are progressing in your trading career and at first you were kind of hesitant about, the way you're trading, your consistency, and you just weren't really proving yourself, right? So you stuck with the monthly option because you kept blowing account after account, and it just made more sense to pay a cheaper activation fee than paying a larger one-time fee, even though in the long run it seems like it makes sense, but because you aren't at that place where you're going to have the account for that long, it didn't make sense, right? But you're moving along your trading career and you're starting to see that consistency, and you were doing the monthly, but now you're like, hey, I'm holding this account for a long time and I probably will continue to. So you can switch from paying $80 a month to a one-time fee, and that's it. And the cool thing too is that they're able to give you a discount depending on how long you've been, paying for that monthly activation fee. You just contact the customer support team and they'll be able to work out that deal for you. So I think that's a really cool, unique situation with ETF that they're able to offer this because not a lot of companies actually offer this. So big shout out to ETF for that. My LED just went out, so don't mind that. But moving on to timeline and live fees. So I wanted to do just a quick run through of an overview of what you can expect when you are trading with ETF, because again, they make it very clear about how you can become a live funded trader. So you pass the eval, you get moved into the elite account, which is sim funded. Obviously, if you perform well and you are meeting the requirements of the payout window, you get payouts, and then eventually if you continue to show consistency and profitability, you get moved into a live elite account. Now these are the fees that you can expect when you get moved into a live elite account, so it's nice that they list it all out, but essentially it's going to be $435 per month. So it's $150 that's required, that's $300. And then depending on whatever data package you need, for me specifically, I trade NASDAQ, so I would only pick the CME. So that's a minimum of $435 in itself. Obviously, if you want more data, then the price kind of just keeps going up. So definitely keep that in mind. For sure, I'd have to say part of it really makes sense. It really does make sense why there is certain fees applied, just because they are taking care of a live account. You are considered a professional trader. When you're doing business, there's always going to be expenses, so it makes sense. But of course, coming from just being a retail trader and being that person that also doesn't want to spend that much money, I do hope in the future they're able to reduce some of this, maybe the platform fee to half, maybe admin fee to half, that kind of thing. I think that'd be kind of neat. But at the same time, with paying all these different fees for a live account, you are proving that you are a consistently profitable trader. And at the same time, there is some benefits when you move into a live account, like them having better risk management team for you, a dedicated customer service team for you, and a lot of other things that I can't think of right now. So let's move on to the next slide, which is the payout policy rules. Now, with the payout policy rules, I think it's really neat how they're able to maneuver through this. And the reason why I say that is because in 2023, they released an ETF timeline going over all of the changes that they were looking to make in order to make it better for the trader, and then obviously make it better for them too. So we're going to cover that right now. So the first 3 requirements needed in order to take a payout is first, meeting the active trading days on your specific payout cycle. The second is the 40% consistency rule. And then lastly, it's reaching the safety threshold. So on the right-hand side, you can see that your cycle is, going to be changing as far as how many days you need to pass it. So for example, the first and second payout cycle, there are 15 trading days required, and then you would qualify. So once you have your 15 trading days, then you could take your first payout, or at least you meet that first requirement. Once you get to your third payout and on, it's only 10 active trading days. For the consistency rule, it's going to be where your best trading day profit cannot exceed 40% of your total account's P&L. And in order to calculate that, there's a little formula right here. But one thing I'll have to say with this 40% rule is that it's pretty standard. So the best consistency percentage right now in this space for futures is Top Step, as far as having a 50% consistency rule only on the evaluation portion. So on your funded account, you can make as much or as little money as possible. And I personally think that's better because in your funded account, that's where you want to be able to make as much money as you want or as little money as you want and not affect your payouts coming out, right? Whereas when you have a company that does put a consistency threshold on your funded account, you do have to be a little bit more wary and focused on what your P&L is, because then of course if one day tends to just spike up like crazy and then you try to take a payout, they may have the possibility of rejecting or denying that payout. For me personally, I haven't had that experience, but I've definitely seen that in the space. So keep in mind when you are trying to take a payout about the 40% consistency rule. There's Apex, of course, that has a 30% consistency rule. And with Apex, that's where I've had some really high swinging days and some low swinging days, but they have still approved my payouts. And part of it is because with their consistency rule, it is not hard, like a hard rule. It's a soft rule, which basically means they're kind of fluid with it. It's really just a case by case, prove your trading system is legit. And if you're able to prove the trade kind of thing, if they ever ask you, then they'll basically approve it. So something to keep in mind. And then lastly, that safety threshold portion right here. So depending on your account size, it would be whatever your drawdown is plus $100 in order to meet this third requirement. So to give you a quick example, if we actually look at the 50K one step right here, the max drawdown is $2,000. So in order to meet that third requirement, it would be $2,000 plus the 100. So as long as you have the $2,100 in your account, then you would meet the safety threshold. I think that's pretty neat too compared to other companies. From my experience is that with the safety threshold, usually it's a little bit more. So with ETF, it's actually a little bit less. So to use Apex as another comparison, their 50K that I use time and time again, you have to have $2,600 as your safety threshold. And then with ETF, I only need $2,100. So that's $500 less. Now with ETF, for the first 3 payments, the minimum withdrawal you're able to take is actually $100. Now that's pretty neat, and this is the portion that I was really excited about when I heard their ETF timeline. And the reason why I'm excited about this is because it's definitely geared towards the traders that want to ensure that they're locking in the payouts for themselves and making sure that they aren't just waiting for the big payday and then eventually losing that account in total, right? So with having the ability to take $100 every single day, you're paying yourself, you're making sure that it's withdrawing from the market and it's not just sitting there. And when it comes to prop firms, when it comes to trading, I mean, profit is profit, right? There's absolutely nothing wrong with taking profit in my opinion. And so with them allowing this offer for those people that want to take advantage of that, I think that's great. Otherwise, you can be like every other company where you have to wait and take out the full allocation or the minimum of $500 or $1,000. So it definitely stands out that they have this option. I'm also going to link on the screen somewhere right here, or maybe even in the description, a breakdown of their payout policy, because I did a video about this before and it's much more in depth, so you're able to understand hopefully a little bit better in that video. Now, payouts are approved and processed on a daily basis, so as long as you're able to get in that request before 10 a.m. Eastern Standard Time, you would be able to be part of the daily payout. Obviously, depending on the volume of payout requests they get, you may get pushed the next day, but it's still pretty much on a daily basis. The first $12,500 is yours, and after it becomes a 90-10 split. So that's a pretty standard number, pretty solid. But let's go ahead and move into the final piece, which is your maximum withdrawal, which is dependent on your account size. So if you look at the payout cycle, you can see what the maximum would be on the right-hand side. And then the minimum is obviously the 100. When you get to the fourth payout and on, that's when there's no maximum and that's no minimum. So if you wanted to take, I think it's like $25 or $20 or even $10, I think you're able to do that from the fourth payout and on. And then maximum, you can go way above whatever you want to do. So that's a pretty neat thing, just like all the other companies as well. So it's also pretty standard. But one thing that I do want to quickly point out, but I do talk about it a lot more in the other video, going over the payout rules for ETF. Long story short, if you don't decide to take out the full max allocation of your cycle, then whatever money is still left in your account balance, it does not mean you're able to take that out for the next cycle. So using an example of the 50K here, let's say that you only take $1,000 out for the first payout cycle. So that means you have like another $1,000 still sitting in that payout cycle that you did not withdraw, right? You get into the second payout cycle, the max is $2,250. But that does not mean that because you left an extra 1,000 here, that this becomes $3,250. This max cycle amount is still going to be $2,250. It just means you have an extra 1,000 in there from your last cycle. So I hope that kind of, long story short, explains how that works. But again, I'm going to link that video for you guys to watch if you guys really want to break it down even further. Now moving on to the trader dashboard, my mind is kind of just racing a little bit. With the trader dashboard, it's quite simple. There's nothing that really stands out as far as, wow, like this is amazing, like this is all inclusive. It just kind of shows you some basic things and that's about it. I will have to say, compared to Bolinox's trader dashboard, it's a lot nicer and you can see there's a little bit more uniqueness to it. But definitely there's always going to be room for improvement. So you can see on my right hand side, when you do first log into your trader dashboard, this is where all of your accounts would be. As you can see at this time, I don't have any accounts just yet. 2024, trying to get funded, but I don't have any accounts just yet. But you are able to see them all here. You can do the archive button and then it would show you all of your previous accounts. Start a new evaluation if you want to buy a new account. Data add-ons is level 1, level 2 data for your trading. You have affiliate earnings, and then on top it's going to be like all the evals and just extra tabs basically. Now if you were to go into one of your accounts, it would show you this information. It would also show you your consistency percentage. So that's kind of neat. If you do click on details, I believe is where it shows the consistency percentage. I forgot to include that screenshot, so I apologize, but basically this is what it looks like. And then if you don't have it archived like it's active, it'll just be right here. It wouldn't be hidden. And then lastly, for the dashboard, they do have a separate section for your billing information. So you can see all of your payment methods are here, billing info, like your address. And then if you keep on going down, that's going to be all of the invoice history you've had. So all the accounts you've ever purchased would be down there. I'll have to say, when it came to my my invoice history, I was having some, I don't know if it was glitches or technical difficulties, but for some of my receipts I didn't receive them via email, and that's what I'm kind of used to, so I had to reach out to ETF for those specific emails. But then I also, instead, to make it easier myself, I just asked them if they can give me a full invoice sheet, and they actually provided me with an Excel sheet of all the payments that I've ever made. So that was really, really clutch of them, because 3 other companies that I asked for the same information, they couldn't provide it. So ETF definitely stood out in that sense of being able to provide me all the invoices I've ever paid. And then for suggestions for improvement, you can see my list is kind of short. I actually wanted to add one more, which was about the trader dashboard, but we kind of already touched base on that. So then the next thing I would suggest for improvement is the daily loss limit. So if you do ever hit your daily loss limit in ETF, you lose your account, right? Your account becomes closed and you don't have a chance to kind of work your way out of it. Essentially, you have to buy a new one. Now, I think being in the space and the day and age of prop firms that we're in right now, you can start to see the levels of competitors kind of rise. And I think at this point, one of the baselines that a lot of competitors are starting to work towards and have is where daily loss limits don't breach your account anymore. So I do think that if ETF is able to implement at least this, simple change, then I think that it would help bring them up even more. Now, like truthfully enough, I do believe ETF is actually up there already. I think they have so much to offer. They have a lot of potential, and I do think they're on the right track to really become a great company. I've been loving them since I joined with them last year, and seeing their ETF timeline from 2023 and the momentum that they've gathered from that, I can only expect to see them go up, up, and away. So if they're able to implement this simple change here, just like all the other, foundations of different competitors, I do think they'd be on the equal playing field. Now, this definitely is more applicable for those end of day drawdown accounts. So, for my end of day drawdown traders out there, let me know if that is something that you care about, where your DLL becomes breached and close the account, or if it becomes breached and you have the chance to trade the next day. So you're just suspended for the current trading day, but you come back the next day to continue trading. Let me know what you guys think about that. And then lastly, it's going to be lowering the payout cycle days. So as you saw earlier, you have to have a certain amount of trading days per cycle for the first and second. And then from the third and on, it's just 10. First and second is 15 trading days, and that's about 3 weeks of a month. Now, that's there's definitely more companies out there that have a lot more rules when it comes to payouts. So definitely not complaining, but I do believe, again, because the way that the competitiveness in this space is starting to rise, one of the things is having like that standardized payout dates. I think, again, that would definitely like kind of put them either on the same playing field or even higher. So if they were to implement either a flat 10 days across the board or even lowering it or something of that nature, I do believe that's going to help them a lot. But overall, that's everything I wanted to cover when it came to ETF. I do believe that, again, ETF is a really great company. In my honest and humble opinion, from my experiences from their accounts to the customer service to the community to just being a part of it, I do believe that it's a very positive, overwhelmingly experience. I think that they have a lot to offer, a lot of potential in this space, and especially with the kind of static and diamond hands accounts they're already offering, they stand out a lot. They stand out a lot compared to other companies. So if they continue to drive the momentum that they're having from last year into this year, into the following year, and so on, I do see them continuing to like grow up in the ladder. Now with ETF, just like I mentioned earlier, and for any other company, there's always going to be room for improvement. But at the end of the day, with the competitive level just kind of rising and rising, the more competition between the companies, then there's more opportunities for us as traders, because they're just going to want to become better and just prove that they're the best by offering the best, and that's going to be better for us. Give me $1 for every time I said that. But that's everything I want to cover. I do really hope you enjoyed this video. Let me know down in the comment section below if there's anything else you want me to cover. But I will continue to make prop firm company reviews and share my experiences about them, because I know you guys just want to know all about that. So I got you. There's more on the way. But again, I appreciate your time and support. And as always, I wish you nothing but the best and most success in everything you do. And I'll see you all in the next video.